Nice all green there. Well, on this side anyway. Enterprise value 160. What how much cash they got? Nice, got 36 million of cash. That's good. Operating cash flow, that's good. Uh, next results, total growth there. So 18 value is it's not the highest of values, but it's okay growth there. Efficiency potential there. And the potential, so broker target's only 37% up. But I mean, understand I do talk about the potential in the blog notes. It's not the be all and end all. Because of course, they win new contracts, big contracts, that potential will go up. So it's not like it's set in stone, So if you're seeing a company, I think above, well, in fact, I put above 40%. It's in the green. So if that's about 40%, it's in the green. That's 12-month target, by the way. But sometimes the broker targets, if they're ridiculously high, it's I think. So I prefer to see something a reasonable, 30, 40% rather than 250%. And they've got to do some stuff to get there, a lot of stuff. Like that seems quite a comfortable target. So you see the half year results were obviously the growth in the half year is a bit bigger than that, but operating profit growth is very good, net profit growth is very good. Uh, Free cash flow went down. What was that? I don't know why. Price of sales, PE 12 is fine, isn't it? I mean, EBITDA 12. Um, yeah, I think I said it's looking good. I think it was a nice little company, and like I said, could go a little bit. It needs to come down, maybe a little bit of a lower high there, but that could need again. Probably needs to consolidate up and down that around. Ramsden's, I still don't believe Ramsden's is quite there yet. Like I said, it's come down. It's had the thing, but probably needs to go sideways a while. But today is a good start. So you get this, powerful sort of rally off the bottom sometimes, and you get the sellers coming in, and then all of a sudden you get a nice day like today. It comes up, and maybe it'll go up again. Who knows? It'll go sideways, but at least it seems like they're off the lows. So it's a good start. It's above 50-day moving average. You're starting to see momentum come back in, so I quite like that. And of course, just look at the scores, and you can see that. There's got to be a way of monitoring, changing. I mean, because obviously the scores change every day according to whether value will change and the momentum will change, of course, and the potential will change because of the share price could go up or down. And so literally, if you click on any of these now up here, like I said, current ratio, these pop up. Okay, so you got cash net debt. Okay, so anything you need, gross margins, for example, return on capital employed. I know Warren Buffett, return on capital employed, return on equity, same kind of thing, right? But I know Warren Buffett loves that because it does stick with me. When you see companies like that have good return on capital employed, it's a very good metric because it's working capital, which is regarded as total assets. Take away the current liabilities because of course you have to pay those down. So the assets there, and you look at operating profit, and you divide that basically and see how much money they're making from their assets, their working capital. And companies are going to make a higher profit there, percentage profit on that working capital, of course, are more efficient. If you've got two companies, for example, in the same industry, and one is, using their capital more efficiently, basically the money they're, investing, whatever they're doing, then obviously it's a better business. So it's worth paying attention to return on capital employed. Sanderson, this is the company, I think it's a very high quality company. No news out, apart from they're coming up with news very soon. I think Sanderson could do well. Look at that, all green. They've got cash of 20 million, 84% upside, the broker says. They are in posh luxury interior furnishings. They've got contracts with quite some big names. So it's high end. And you're thinking, is that market squeezed, the luxury end, or not? Maybe, I don't know. The volume's good. Um, like I said, they did have 20% growth last year, and then it dropped down to -2. But the value is good. So if you've got good value, the value is good, efficiency is good, everything's so good there, apart from these three. So that side's okay, this side's not. And so you want to get some growth back and you need some momentum. But I think it's one worth watching, a quality company, I believe, because look, even the margins, for what they do, gross margin 67%, operating and return on capital 13%. That's impressive, for what they do, manufacturing, interior design, all that stuff. So I do quite like them. I think they are a standout. but as yet they're not, SDG. That I don't know where the IPO was. What was that? 17th. I don't know what happened there. But it's nice. Look at that. Look at that chart there. I like to analyze. That's the kind of chart you want. That's what I'm saying. It literally, it hasn't touched that 200-day moving average since then. December 2020, just carried on going, and then broke down, and literally it didn't spend 1, 2, 3 days below the 250-day, and then it broke down. Spent a few warning sign, and you start breaking down. It comes all the way down from £2, and we are now down at 102. But I think it could be a nice little company. Decent company, a good investment, but not yet, maybe. Vanel's quickly get through these. Vanel's another one. I mean, I was looking at Hercules and Vanel, and Hercules got quite a bit of, they are in sort of, I think if the economy picks up and, more building construction goes on, both Vanel and Hercules could do well. But Vanel's got a better balance sheet than Hercules, even though Hercules is up here. So health is very questionable there. But where is Vanel? Vanel is number 18, so it's top quartile pretty much. So cash of 8 million, no debt, operating cash flow, good growth. But what was that again? Tale of two halves here. So in October, it really slowed down. Last year was fine, but again, value's good. Health is good. Efficiency is not. In fact, do you know what? The efficiency got better here, a little bit as good. Gross margin did. Broker's got 48% upside. There's no momentum in the chart at all. The thing is, if you've got everything else and they have momentum, it's just a waiting game. Obviously it's worth. And the updates, if the updates are good, momentum will kick in. Literally, it's come down from what IPO at 101. Not a lot of brokers, a lot of fund managers like this, trading in a range pretty much. But again, it's got no momentum.